Hey guys, it is Julie here with JT Wealth. In today's video, we are discussing DraftKings. We're going to talk about all the exciting news they've gotten lately, plus what analysts are expecting as we head into their next earnings report. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are discussing the online betting company DraftKings. So in today's video, we're going to go over recent news that has been favorable for DraftKings, as well as some analyst updates and expectations as we head towards their next earnings report. Now, just before we get into all of that info, I want to take a quick second to shout out a fellow financial YouTuber, and that is Tyler Hill. Now, Tyler just had the worst thing happen to him, where someone hacked his account, deleted all of his videos, and is now running his account under a different name. So now Tyler has to start from ground zero again, recreate, remonetize, all of that. So he has now started up Tyler Hill Investing 2.0. Tyler had been grinding it out on his other channel and recently just got over 10,000 subscribers and now has had to start back at zero. So do me a favor, make sure you go check out his new channel, hit subscribe, and show Tyler some love. I know I've had sign-in attempts on some of my accounts and I would be devastated if they were actually successful. And Tyler is already back at it, getting back to what he loves here on YouTube, so he is handling it much better than I ever would. All right, with that being said, let's get into DraftKings. They trade under the ticker DKNG and are currently at about $60.88 per share. DraftKings just became public back in April of 2020 and has seen some great growth since then, especially as we see sports betting legalization start to spread across the US. And that is just part of the great news they've been receiving these last few months. Back in September, it was announced that NBA legend Michael Jordan would join the company's board of directors as a special advisor. And in mid-September, DraftKings entered into a multi-year agreement with Disney's ESPN to become a co-exclusive sportsbook link-out provider and exclusive daily fantasy sports provider of the media giant. Then moving into January, New York State Governor Andrew Cuomo announced legislation that would allow sports betting in the state. He stated that New York has the potential to be the largest sports wagering market in the United States, and by legalizing online sports betting, we aim to keep millions of dollars in revenue here at home, which will only strengthen our ability to rebuild from the coronavirus crisis. Later in January, we saw Michigan also launch online sports betting and casino games. And just 2 days after that, DraftKings announced the launch of DraftKings Sportsbook in Virginia, marking the 12th state in which DraftKings is available. And then just 2 days after that, we saw DraftKings surge over 5% after Goldman Sachs upgraded the DKNG stock from neutral to buy while raising the price target from 45 to 65. Meanwhile, Bernstein started coverage with an outperform rating and a $71 price target. According to Goldman analyst Stephen Grambling, he said, "We upgraded DKNG to buy as we expect ongoing sales beats versus consensus, driven by 1, sustained market-leading position in new and existing markets, 2, the ability to participate in the economics of single operator states, and 3, the presence of national partnerships that should allow them to accelerate growth and achieve scale sooner than the broader peer group." Now we enter February and we've seen even further good news for DraftKings. As just on February 4th, the company announced it expanded its exclusive daily fantasy partnership with the NFL to Canada. Previously, the deal between DraftKings and the NFL was limited to the United States. Then also on February 8th, ARK Invest added over 500,000 total shares in its portfolio of ETFs. On February 1st, Cathie Wood's ARK Invest disclosed a new position of 620,000 shares for the ARK Next Generation Internet ETF. So with all of this positive news, it is no surprise that the DraftKings stock has seen some great growth over these last few months. And now we are approaching their earnings report date on February 26th. So let's take a look at some of the numbers there as far as what is expected for their revenue and growth. DraftKings is on the road to profitability. After losing $3.26 a share in 2019, analysts expect the company to lose $1.91 in 2020, $1.22 per share in 2021. On the revenue side, DraftKings saw a 98% year-over-year surge to $132.8 million in their latest quarter, reported back in November. In that quarter, the company raised its full year 2020 revenue range to $540 to $560 million, which equates to 25 to 30% annual revenue growth. DraftKings also introduced 2021 revenue guidance of $750 to $850 million, which equates to 45% year-over-year growth using the midpoints. There is one analyst who recently let us know that they're feeling optimistic, as Oppenheimer just boosted their price target ahead of earnings. And that was Oppenheimer analyst Jed Kelly, who boosted his price target by 23%, citing optimism ahead of the sports betting company's fourth quarter results. Kelly said he expects the company to raise its 2021 revenue guidance, as an analysis of state data implies solid upside to revenue expectations. He said he believes investors are underappreciating iGaming momentum, saying if current market share trends hold, he believes DraftKings can potentially generate more than $1 billion of 2020 revenue in the states where it is currently live. Right now, there are 15 current analyst ratings on the DraftKings stock. It comes in as a moderate buy with 10 buy ratings, 4 holds, and 1 sell. The average price target is $67.79 for an upside potential of about 11%. If we look at our detailed list of analyst price targets, we can see that we have quite a range of expectations. As we said before, that most recent rating came yesterday from Jed Kelly at Oppenheimer, who gave it that $80 price target, which would be about a 32% potential upside. Our lowest rating comes 1 month ago from a one-star analyst at Berenberg Bank, who has a sell rating and a $41 price target. But 1 month ago, we have 2 analysts who gave the stock a $100 price target, which would be over a 65% potential upside. So there has already been a lot of growth in the DraftKings stock, but there are many people who still think there is plenty more room to grow. Right now, that legal online sports betting is only allowed in 12 states, but we are seeing that change and expand into more and more states, and it's a big move for them to be expanding up into Canada as well. And don't forget that DraftKings covers way more than just your standard fantasy sports. Beyond your typical fantasy football, basketball, and baseball, they also have fantasy League of Legends, tennis, Rocket League, and Call of Duty. So a lot of exciting momentum for DraftKings as they continue to grow, and it'll be interesting to see where they come in at on this earnings report and how exactly the markets react. Now, you guys know I always love hearing from you, so make sure to leave your thoughts in the comments down below. What do you think of the DraftKings stock? Is this one that you hold? Is it one that you're looking to get into? And how do you think they're going to do after this next earnings report? Keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Make sure you're always doing your own research and due diligence before making any investment decision. If you made it all the way to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and cheers.